Hi, I'm Scott Nelson. I'm a Senior Wealth Manager with Boulay Financial Advisors. I'm here to bring you our fourth quarter of 2020 market review. It's January of 2021. Happy New Year. While the markets did well in 2020, I think we can all agree there's a lot of things we hope improve in 2021. On behalf of Boulay, we hope that you're doing well, staying safe, staying busy, and not getting cabin fever. So let's go take a look and see what happened to the markets in the fourth quarter of 2020.
The course of the economy in 2020 was pretty much reflected in the monthly unemployment rate. We started the year with a very tight labor market, with the economy firing on all pistons, but with that first wave of COVID-19 infection starting in March, the U.S. saw widespread economic shutdowns that put over 20 million people out of work. Since May, the economy has steadily tried to recoup those losses, but as you can see, that progress was stalled in the fourth quarter with the onset of colder weather and the biggest wave of COVID-19 infections to date, which has closed many businesses yet again. While the unemployment rate is down considerably from the spring, there are still over 10 million jobs that have yet to come back. Despite 2020's difficulties, the equity markets did surprisingly well. U.S. large-cap stocks led the way and managed to finish the year strong. The crisp large-cap index was up nearly 13% in the fourth quarter and finished the year up over 21%. It was the news of the completion of the COVID-19 vaccines in October that gave the market a new spark just as it was flagging in September. With some rough idea of when the pandemic would be coming to an end, investors moved back into many sectors that had up to that point been significantly down for the year. U.S. small cap stocks had a very strong fourth quarter, rising over 27%. That helped the crisp small cap index end the year up just over 19%. International stocks also rallied on the vaccine news. The MSCI All-Country Index, that excludes the U.S., rose 16.7% in the fourth quarter, which helped the index turn in a return over 10% for the year. Emerging markets were up a solid 19.4% in the fourth quarter and ended up the year up over 18%. As I mentioned, the market's strength in the fourth quarter can be attributed to investors looking past the pandemic. That led energy and financials, a couple of the hardest hit sectors in the spring, to be among the hottest sectors in the fall. The energy sector was up over 28% in the fourth quarter. The fact that energy was still down over 32% for the year speaks to just how far that sector has yet to go. A fourth quarter return of over 23% helped the financial sector end the year down less than 2%. While it was a positive quarter for the real estate, with a 5% return, the sector still brought up the rear in the fourth quarter over continued concerns about the fate of shopping malls and office buildings. But the sector ended the year down just 2%. Consumer staples were up over 10% for the year, but enthusiasm for hoarding toilet paper and baking bread seems to be waning as the sector straggled behind all but real estate in the fourth quarter. It should be no surprise that the best performing sectors of 2020 held many of the companies that have been helping us get through the pandemic and to work from home. Technology companies that kept us connected, online retailers that kept us stocked, and internet companies that have kept us entertained were the big winners in 2020. The other big winner? The housing market. Low mortgage rates and the desire for a big backyard to escape the pandemic made it a good year for construction and building material companies as well. In the end, 2020 turned out to be a really good year for the bond markets, despite some early concerns about market instability during the March pullback. But the Federal Reserve's ongoing bond buying program has restored an orderly market while propping up demand that helped all sectors enjoy strong returns for the year. The fourth quarter vaccine news added some momentum to the shifting of investor priorities from safety to seeking out higher yields. A small negative return for government bonds and decent returns for the corporate bond sectors was the result of that shift. The 10-year Treasury bond ended the year just under 1%. But as you can see, it also tells a story of 2020 and just how strong the demand for Treasuries was in the spring, that the 10-year yield was pushed down by nearly 1.5% by mid-year to a measly 0.5% before rebounding somewhat with the investor shift to corporates in the fall. Thinking about 2021, there is little debate that the most important factor to continuing economic and stock market growth is the rollout of the COVID-19 vaccine to the broader population. The successful reinflation of the economy, the return of jobs, and solid profitability for companies depends very much on people feeling safe to do everything from eat and drink to work and shop in close quarters to each other. Today, we stand at a little more than 3% of the population having been vaccinated for the first shot at least, and we need that figure to be closer to 70% to put the pandemic behind us. So there is definite work to be done in 2021 before the economy meets the expectations that the market has expressed with these fourth quarter rally. So don't be surprised by some market volatility when news of earnings and vaccine updates causes investors to reassess just how long a full recovery will likely take. Well, that is the market review for the fourth quarter of 2020. We hope that you found it informative. If you have any questions, please get in touch with your Boulay Financial Advisor. If you do not have a Boulay Financial Advisor, please contact us at learnmore@boulaygroup.com or check out our posts on social media as well as our website. Until next quarter, best wishes and take care.